There's this great story about a chief accountant, a guy who was retiring after 30 years with the same company. And for 3 decades, every single morning, his colleagues would see him do the same ritual. He'd unlock his desk drawer, pull out a tiny slip of paper, look at it, and then lock it away again. On his last day, this young, curious clerk finally gets up the nerve to ask him, what's the secret on that paper? The old accountant just smiles, unlocks the drawer one last time, and shows him. All it said was, debit on the left and credit on the right. It's a funny story, right? But it kind of shows you something important. Even the experts need a reminder of the basics sometimes. Accounting can feel like this intimidating secret language that only a few people get to speak, but it really doesn't have to be that way. And that's what we're going to do here. We're going to demystify it. We're going to give you the key to unlock that secret language of business. Okay, so this secret language, where do we even begin? Well, believe it or not, the entire incredibly complex world of accounting is actually built on just 3 fundamental ideas. You can think of them like these pillars holding up the whole structure. Once you get these 3 down, you're honestly well on your way. First up, assets. And look, all this means is the valuable stuff a business owns that helps it make money. It's the cash in the bank, the buildings they own, the delivery trucks on the road, the computers on the desks. Pretty much any resource the company controls that has value, that's an asset. This second pillar is really just the other side of the coin, liabilities. So if assets are what a business owns, liabilities are what it owes. This can be anything from a huge bank loan for a new factory all the way down to this month's unpaid electricity bill. It's all the company's debt. And our third pillar, the one that kind of holds it all together, is capital. This is basically the owner's skin in the game. It's the money they've personally put into the business to get it off the ground and keep it going. For a big public company, you'll see this as shares. It's really the true foundation of the business's worth. So there you have it, our 3 pillars: assets, liabilities, and capital. But, theory is one thing. Now let's see how this language actually gets put to work in the real world, in the day-to-day grind of running a business. A massive part of daily business life is just managing the cash flowing in and out. You have to pay your suppliers, you have to pay your employees, but maybe most importantly, you have to make sure your customers actually pay you. The money they owe you is technically an asset, sure, but how do you make sure that promise turns into actual cash in your bank account? Well, this is the tool, the Aged Debtor Report. It's basically a simple but powerful snapshot of who owes you money and, crucially, just how late they are with their payment. At a glance, you can see who's 30, 60, even 90 days past due. This thing isn't just a record, it's an action plan. It tells you exactly who you need to call to get that cash flowing. Another huge daily job is payroll. And as you can see here, it's so much more than just writing a check. You start with what's called gross pay. That's the total amount earned. But from there, a bookkeeper has to navigate this whole maze of deductions for taxes and Social Security, all based on these really complex tax codes. Getting from that big number down to the smaller net pay that an employee actually sees, it's a super critical and pretty tricky process. Okay, so we've seen the nitty-gritty details, but the real power of accounting isn't just about keeping track of what's already happened. It's about using those numbers to look into the future and make really big strategic decisions. You know the saying, a picture is worth 1,000 words? Well, in finance, there's one picture that's probably worth 1,000 spreadsheets. It's a visual roadmap that shows a business the single most important point in its journey, the exact moment it stops losing money and finally starts making it. And here it is, the break-even chart. So let's just walk through it real quick. This flat line here, those are your fixed costs, things like rent that you have to pay no matter what. This diagonal line shows your total costs, which climb as you sell more stuff. And this steepest line, that's your sales revenue. The magic moment is right here, where the revenue line finally crosses over the total cost line. Everything to the left of that point, you're losing money. Everything to the right, you're in the black. You're profitable. So the numbers can tell a very clear story. But what happens when that story is maybe a little bit of fiction? The figures you see on a report don't always show the full picture, and it really pays to know how to read between the lines. If you want to see what total transparency looks like, you just have to read Warren Buffett's annual letters to his shareholders. They are legendary for being straightforward, honest, and just telling it like it is. He really sets the gold standard. But what if a company doesn't want to be quite that open? Well, in that case, they might try a little something called window dressing. And it's exactly what it sounds like. Just like a store makes its front window look as attractive as possible, some companies will arrange their numbers to make their financial situation look way better than it actually is. So, how does that even work? Let's look at a classic trick. Imagine a company's financial year ends on October 31st, but their cash in the bank is looking pretty low. So the accountant simply takes the payments that actually came in during the first few days of November, and they just backdate them, recording them as if they arrived on October 31st. It doesn't actually change their profit, but suddenly the cash balance on that year-end report looks a whole lot healthier. But here's the crucial thing to remember. It's a short-term illusion. It's what they call a robbing Peter to pay Paul situation. You've now created a hole in the next month's numbers that you're going to have to fill somehow. It's a ticking time bomb, really. And when these kinds of tricks get discovered, a company's stock can absolutely plummet. Reality always catches up. And all of this brings us to a much bigger question. If the numbers can be fudged like this, who's supposed to be the referee? Who are the guardians making sure the reports we all rely on are actually true? Well, that job is supposed to fall to the auditors. And really, we can't overstate how important this is. The entire market, we're talking trillions of dollars in investments and loans, is built on the belief that these financial statements are accurate. Auditors are supposed to be the independent check, the bedrock of trust that the whole system is built on. But the role of these big accounting firms has changed a lot. If you go back 50 years or so, auditing was their main thing. Their job was clear: be an independent check on a company's books. But today, auditing is often just one small service these firms offer. They make most of their money from really lucrative consulting gigs, often for the exact same clients they're supposed to be independently auditing. And you can see how this creates a huge, obvious conflict of interest. I mean, can you really be an impartial referee when one of the teams is also paying you millions of dollars for advice? How tough are you going to be in an audit when you're afraid of losing a massive consulting contract? It's a huge problem, and it's the question everyone asks after a big company collapses, and we find out the auditors somehow missed all the red flags. Which brings everything back around to you. We started with the secret language of business, assets, liabilities, capital. We looked at the tools people use to manage it and see the big picture, and we've even uncovered some of the tricks of the trade. So the question I want to leave you with is this. Now that you know the language, the tools, and the tricks, how are you going to read the next financial report you see?